Okay, here we go. Oh, yes. I love hitting the live button. It's so exciting. Hey, while you're watching this, you know, thumbs up, if you will, a heart, an applause. I stream on these destinations. So if you're watching on LinkedIn or Facebook, you know what to do. All of them. If you're watching on YouTube, please subscribe. Um, and this way you'll never miss another great episode of my live stream. Be the boss of your money. It's really your live stream, yours, because it's about helping you be the boss of your money. It's about helping you take control of your finances. It's about helping you to become your best version of your financial self. That's what the show is all about. And I want you to pay attention and do well. And that's what we do here. So when you like this, you spread the word with all your friends on Facebook and your linkies and LinkedIn, your contacts, okay, your connections. So, hit it up. That's how you support the show. I don't have sponsors. I do all this myself, all the equipment and the time it takes to prepare for the show. And I put a lot of effort into it. I know you know that. I'm not asking for, I'm not trying to give you a sob story, but I do put a lot into this. And I do hope that you'll give it give it a share and the likes and all that so that you could spread the good word and attract more people to the show. And this way more people ask me questions. I take those questions, I answer them obviously, and I love hearing from you. So if you have any questions, please ask me in the comments. um, and it's the best part of doing this. And I love to use at this when you give it a like, or give it a thumbs up, a heart, whatever. I'll see your name, and this way I could acknowledge you. I could acknowledge you and say, I could say hello. That's something that is always the best. A couple of things to talk about today. So the stock market, after the worst day for the stock market in over 2 years yesterday, we got actually what I think is a very, very good day, and not for the reasons you think. You'd probably think, oh, well, it was a good day because the market bounced back hundreds of points, 500, 800 points. No, I'm very happy that the market was basically flat today. I don't like big up days and big down days that are followed with another big up or down day that's just the reverse of the day before. That's just pure volatility for nothing. I like a stable day, let the market catch its breath, let investors stand on some terra firma, some good solid ground, and then we could maybe, build on it, catch our breath, see what's happening, see if it's worthwhile to be in it in the market, to add more to the market. And just to make sure this isn't, these are blanket statements we make here. A lot of blanket statements like, is it a good time to invest in the market? Is it a bad time to invest in the market? And since everybody's invested in the market, in the stock market, it's a catchy phrase, a catchy catch-all question. But this really depends on your time horizon. If you're investing now and your time horizon is 20 years out, 10 years out, 15, what a long time horizon. Yesterday doesn't really mean much to you. The fact that the market, the Dow went down almost 1,300 points. Today's stabilizing day doesn't mean that much either. If you're investing in a 401k plan, for example, you put a little bit of money into your 401k plan every pay period. You keep doing that. This down market's your friend. This is what gives you the opportunity to buy lower prices, as opposed to when the market's galloping ahead. You keep buying fewer and fewer shares with the same dollar amount because prices keep going up, right? That's how the math works. Now you get to buy more shares of whatever you're purchasing with the same amount of money because the market's going down, because the math works in the opposite direction as well. So this is your opportunity. Now, I spoke with somebody today, a very nice man. He's 82 years old. And he is invested very conservatively in some interest bearing portfolios that are paying about 5% interest guaranteed. And what happened is he was put into some investments at an time in his life that I don't think was a good time to be in them, but now it'll work out for him. So he's been getting a really good yield, 5%. Um, and he's calling me now asking me about, he was not my client when he bought the stuff. He's a referral from a friend. Uh, he's not suitable. He doesn't need to do anything. I told him to leave what he has alone, and he really appreciated the sincere advice. So, how did this work out? based on his age of 82, and he's worried about inflation, keeping ahead of inflation. But he's also, his concern now is what I explained to him is preservation of capital. He's too old, in other words, to take the shot and decide to go into the stock market at this point. He's getting a decent yield, very stable, and he's actually right where he should be. And he was really surprised that I told him don't do anything. Like he's like, that's like no one ever tells him that, but that's okay. Nice guy, and you put out into the world, you put out into the universe good things, and you get good things back from the universe, right? So when I talk about the stock market, time to buy, should you be in it? This doesn't apply to that guy. That's what I'm talking about. This doesn't really matter for him. He's got a little bit of money in some IRAs. His wife has an IRA, and he's like, "Wow, they're down like 30%." I'm like, "Can you imagine if all your money was in those IRAs? Then where would you be right now? Not getting 5% plus through a down market. I know you're worried about inflation, but you're still getting 5%. So maybe you're losing 3.5% to inflation because inflation's running about 8.5%. But if you're in the stock market, you'd be down 30% plus 8.5%. And we don't know when it comes back. And he's too old to wait. I told him if he was 60, it would be a very, very different story. So these are the kinds of things that I talk to clients about. It's not always should you buy now or not. It's not always should you buy this stock or that stock. It's often just a general consensus in terms of what you have should you stick with. In his case, he should stick with it. All right. Anyway, let me run a quick intro. We're going to talk about some interest rates. The 2-year Treasury bond is paying about 3.8%, which, if you think about it, if you're just going to leave money in a savings account, a checking account for a long time, all right, 2-year yield of 3.8% is very appealing. And then I'll show you what an interest rate is from another company for the 2-year CD, and I'll help you make a decision in terms of what you could do. We'll also talk about how the market did today, some of the big movers, and put a little perspective in it. Just to reiterate, I'm glad we didn't have a big bounce up because it could have just been repealed tomorrow. I want the market to get to a steady place. Let's roll the intro. We're going to have a good show. Again, hit me up with your questions in the comments. Words of wisdom, words of encouragement in the comments are always appreciated as well. And don't forget, thumbs up, hit that little button. Here we go. Coffee. It's 5 o'clock on the East Coast, and a lot of my peeps say they would never drink coffee this late. I will have my last cup of coffee typically about 9 o'clock at night, but I do work out kind of late after 10 o'clock at night, so it's a good thing for me. I burn it off. All right, so let's talk about yields first. All right, I want to talk to you about the 2-year Treasury. All right, let's see if I have that up here. Look at that. 3.79. Whether if it's 3.79 or 3.8, that's really that little basis point is meaningless. Okay. This is where treasuries are. Treasury yields in the 2-year Treasury have climbed a lot. It's the 2-year Treasury bond of the 2-year, the 5-year, the 10-year, the 20-year, 30-year. The 2-year is the most sensitive to changes in short-term interest rates that are controlled by the Federal Reserve. We're talking about the federal funds rate. Okay, that's the amount of money that banks charge each other for overnight loans, because banks are always lending and borrowing with each other. Okay, to make sure they square away their capital needs every day. And the Fed could lower that or raise that depending on whether or not they want to make borrowing more expensive or not. Okay, if the Fed makes borrowing more expensive, people buy less stuff, corporations spend less money because everything is financed. It slows the economy. The Fed's trying to slow the economy to bring down inflation. However, let's get back to this. If you're going to put money into a CD, and I'll show you Marcus. This is by Goldman Sachs online bank. High yield certificates of deposit, 3% for a 2-year CD. Well, if you're going to lock up money in a CD, and this is what people do, they go into the bank and they call the bank and they say, "I need a CD. What pays interest?" Why would you buy that when you could get the 2-year Treasury, which is guaranteed, guaranteed at almost 3.8%? It's a pretty big difference. If this is like 3.1% and a CD at a bank was 2.9 or 3%, not that big of a deal. But this is, I think, for people who are seeking yield, who are used to getting 0% or 0.01 or 0.05 in the bank for all these last couple of years, to be able to get 3.79% is a pretty good deal compared to that. I'm just saying compared to zero. So, Rita, before you say that that was a recommendation, I'm just comparing a lower rate to a higher rate. You see? Okay, my friend? All right, you get me. So, that so interest rates have come up so much in the short term yields, and compared to a 2-year CD, plus the treasury securities are exempt from state income taxes. So if you live in a high state tax state like New York or California, it makes a 2-year treasury even more compelling compared to a CD, because CD yields are subject to both federal and state income taxes. And I think there's only like 7 states that don't have a state income tax. So there you go. I just wanted to point that out. And this is about personal finance. So if you're leaving money in your account for the long term for 2 years, you can get a 2-year treasury. You can always sell the 2-year treasury, by the way, between now and when it matures. The difference is, though, if rates keep going up, you could lose a little bit of money you could lose principal on the 2-year bond. But if you're holding it till maturity, you'll get your principal back, plus you get an okay yield. I think that's interesting. How's that? How's that for the word? Okay. Let's keep going. All right. U.S. markets. The Dow is up a measly 30 points. NASDAQ up 86 points. S&P up a measly 13 points. All right. Very, very flat day. The Dow was down about 200 earlier today and looked like we were going to have another rout today. But things turn around and the markets have been bouncing around. Let me just take this off. Markets have been bouncing around between positive and negative pretty much all day. Let me make this bigger so you could see it. All right. And then you have gold, which continues to go down, almost down to 1,700. Oil is moving up, though. You see that oil is moving up in price. It was 82 about a week ago. The 10-year yield went down to 3.4. The 2-year yield went up a drop. See, up 0.034. And the 10-year yield went down a drop. So that's not where I want to be. The 10-year went down a drop. So the yield curve is a little bit less inverted, and the VIX was off a little bit. It's actually off 4%. Not bad considering we had a very small move in the market. And that just goes to show you that it's probably overdone yesterday's sell-off based on the VIX today. It was a lot of the sell-off yesterday was because investors were so positioned, short-term investors, for a cooler than expected inflation report yesterday in the consumer price index, that so many people are caught on the wrong side that when the reversal hit, everybody did it at once, and that's why you saw the massive stampede out of the market yesterday. Okay, that was a big day down. I don't make a big fuss over down days or up days in the market, but when it's 4% or so, that's a pretty big day. All right. Like yesterday, 4% move to the downside. Let's take a look at a couple of movers on the day. All right. Starbucks, don't go by the 0.04. That's aftermarket trading. Go by this. Starbucks is up 5.5% today, closing at 92.70. All right. It's a client first stock. We spoke about that. Moderna was up $8. It was up $8 a share, up 6%. Okay, Starbucks went up, by the way, because they raised guidance. They raised their expected earnings potential. Got people excited about it. A lot of people got a little negative on Starbucks. They thought, well, what if all the stores unionize? Okay. Moderna said they'd be open to selling their COVID vaccine into China, which could be tremendously big for them. Very tremendous boost to sales. Okay. Let's get Nucor for a second. Intel. If you see this over here, okay, 52-week low. Intel hit a 52-week low today of $29.01. So much for building these giant plants in Ohio that was going to get the company running. I do believe Intel will thrive one day because they are investing so much money into their future. There are a lot of companies that look like they're doing well today. They are doing well. Their earnings are really good, but they're not reinvesting into their future. Their earnings would look less if they reinvested in R&D, plants, and equipment. And one thing Intel is doing is they're spending a lot of money on their business. And the bet now is the stock low enough to take a shot that their spending spree will pay off? That's a personal finance question. We'll have to talk about that. If you want to talk about that, give me a call. We'll discuss it one-on-one. You can reach me. You know where to reach me. Just look up client for strategy or send me a DM and we'll talk. Okay. And let's take a look at something else here. Okay. 30-year yield, 30-year mortgage, 6.3 nationwide average. So 6% plus now on the 30-year mortgage. It's not just like we touched 6 and back off. We hit 6 and we stayed above 6% on the 30-year mortgage. So I'm waiting to see what that does to the housing market. But it can't be good for the housing market. So many people leveraged up and so many people reached to buy a house. We'll see how that works for them. Okay. And like I said, the spread was down a little bit by 0.05% on the difference between the 10-year and the 2-year treasuries. That's the yield curve right there. So overall, bit of a flat day, which is what we wanted. And this is something that we can build on. I think yesterday was a little overcooked to the downside. So thank you so much for watching. I am going to get going. I will be doing the live stream tomorrow. I was iffy on it. I have the Long Island Fight for Charity tomorrow at 5:30. I'm definitely going to that. It's one of the best events of the year, and we haven't had the event in 3 years, so I can't wait to go. I'm going to see all my friends and hang out, and it's just going to be a blast. And it's a charity fight. So there are people in the business community, my community on Long Island, who are actually getting into a boxing ring and fighting, and they had to go through specialized training, months and months of conditioning and training. They had to pass all kinds of health tests, etc., sign all kinds of waivers also. But it's a pretty serious fight. It's like probably be like 10 fights. It's pretty serious. It's actually a New York State sanctioned boxing event. It's pretty cool to see this. And when you know the people in the ring and they've got the headgear and the gloves and they're duking it out, you start screaming your head off rooting for them. It is so much fun. Anyway, thanks so much for watching. If you think of anything you want to ask me after the show, just hit me up in the comments. I'll be sure to get back to you. Thanks so much and have a great rest of your day.